Hello, this is Manish Patel from IchimokuTrade.com. Today is January 4th, 2015. This is our bi-weekly Ichimoku analysis for the future markets. This is our first video for 2015 and also after a long holiday break too. This is our normal disclaimer to state this is for education use only. We're not soliciting you to buy or sell any particular instruments. If you do so, you're doing that at your own risk. You could go look at our normal disclaimers at ichimokutrade.com for all the disclaimers out there. Also, all the charts you're going to see are from TradeStation. So let's go. Here are our contact details here. You could email us here at info@eiicapital.com, or you could call us at any of the office locations here, or you could basically go to our website here, register for free, access any of our free videos, scanners, multiple time frame email alerts, and many other things. Okay, let's go straight to our charts. Remember, on the left hand side is basically your daily time frame, and the right hand side is the weekly time frame. We're going to focus a lot on the weekly time frames. Reason why is it gives you more of a long-term view, which is what we're looking for. Because as a day trader and swing trader, and even as a scalper, you want to be sitting there trading with the higher time frames. That way you know you have a higher probability of success. Okay, so the first ones we're going to go through is soybean oil. If you look at soybean oil, this is bearish trending. Little consolidation here at the bottom here. However, it's still trying to break the support here at 31.95. Still has a probability for the next 3 weeks to break it. After the next 3 weeks, this thing would have consolidated to a point the momentum is not going to be strong at all. Resistance here is going to be 33.53. As long as this resistance here holds, this is going to be bearish. If this resistance gets broken, then it's going to sit there and go for its first pullback after a long time. Soybeans themselves, if you look at here, this is just one ugly pattern here. Nice bullish trending here. Should have sat there and held the support at basically about 1098. Didn't do that at all. And now it's sitting there, came down here, broke it, pulled back, and now it's sitting here flirting around this support slash resistance at 1028. This thing is bearish right now. As long as this resistance here at 1028 holds, this does have a high probability of coming down to 782, especially since it didn't sit there and hold here and start to go back up to retest a high. Soybean meal, if you look at soybean meal here, bullish trending here, held a major support at 280, broke the resistance at 338. Now it looks like it's bullish, trying to get to about 407 to retest the high. As long as it holds the support at 328, which is major support, 338 is a minor support. Corn, if you look at corn here, bullish trending on both on the weekly time frame. This little upward movement here, which is trying to do its first major pullback here, is causing the daily to be bullish. And you can see here, it's starting to go up. It's got a high probability of getting to 438. The question is, how far will it pull back? Will it sit there and pull back to this minor level? It's at a minor level now. Or will it sit there and pull back to a 373 before it tries to make a move to 435? Right now, the probabilities are that it's high to sit there and hold the support here this week, and if it holds the support here at the Tinkerton, exactly where it's at right now, then it's got a high probability of sitting there getting to 435. If it pulls back to 373, then it could sit there and probably consolidate a little before it gets to 435. So it's going to be interesting to see what happens in that one. Oats here, nice bullish trending here. This is a support right here. It's flirting around. If it breaks that support, this thing's going to not have any more bullish momentum at all, and this is actually going to go bearish in the next couple of weeks here to a point you'll have a high probability getting to 352. This still has about 3 weeks here. As long as it sits there and holds the support here, it could start making a move here to about 351. It's got to sit there and get to 351, and then at that point we got to see exactly what's going to happen. Orange juice here really not doing anything exciting except consolidating between 126 and 156. Wheat here, you can see in the bearish trending here, a nice pullback here, major pullback here to about 656 level, which is our major pullback that we had marked off here. Now it's flirting around here. In order to start resuming the bearish trend here, it's got to break the support here at 575. However, this thing's been very ugly and very volatile to a point. If this thing consolidates here, watch out. This thing could possibly consolidate for the next couple of 3 months and then start making a move up. So this is a very critical support. It has to sit there and break. If it doesn't break that soon, then this is going to sit there and enter a consolidation pattern, or may even possibly reverse. Coffee here, nice bearish trending here. Came all the way here to the pullback level of 223, held it, and it got to support here at 174, broke it. Now it's got a high probability of coming down to 145 and then possibly even lower. So right now, coffee looks like going into 2015 is starting a bearish trend. Sugar here is still continuing its journey going downwards. Remember, we've been talking about this since the beginning of the year here, where this resistance here was a great place to sit there and look at a short. This thing sat there and went down to support level 1819 and is continuing to go down further to the next support level there. Rough rice, if you look at rough rice here, this is bearish trending on both the daily and weekly. And you could see here it's slowly progressing down to about 10.659. As soon as it gets there, then we know that it possibly could break off there, but this is bearish going all the way down there. This is still be bearish as long as these resistances here hold. It'll still be bearish and have a high probability getting to that support. Cocoa here, bullish trending here, finally went for its first major pullback. We got the pullback level here, but it's starting to hold here. It's at a point right now where this has to hold here. If it doesn't, it's going to break down to here, which is the major pullback level. 28.84 is a great level right now for it to hold. If it could hold that, it's going to make a move to about 30.50.87 and possibly break that to keep on going higher. Now we're going to cover energy. You're probably looking forward to this one. Crude oil. Crude oil, there's our targets right there. 49.50.47 is the next support that we see it. If you look at the resistances are moving right now since this is moving down, but the near-term resistance right now is going to be 65.95, and then also about around 60 is going to be the next resistance level. Whoops, cotton is misplaced, but we'll go ahead and cover it. Cotton here was bearish trending, consolidating for a whole year, and now it's resuming its bearish trend to the downside. It's got a high probability here getting to 54.77. So cotton's still bearish. Resistance here is going to be 62.08, so we're going to be bearish as long as that resistance there holds. Next is going to be heating oil. You can see the nice move down. Everyone's been talking about crude oil. What about heating oil and gasoline? This thing's taking a move down here. Next support level is going to be 72.13. Next is going to be natural gas. Natural gas got to its major support level 2.8333. Sits there and is holding it right now. There is a probability that it can sit there and break the support. And the reason why is this had an opportunity here to sit there and remain bullish, but never held the support here and started a bearish trend. Didn't even consolidate after it broke that support at all. It decided to start coming all the way down here. So this is very, very strong. It possibly will go for a pullback before it sits there and breaks that support level. So we'll have to wait and see. But probably towards the middle of this year, we'll have to see, get an idea. If you look at gasoline, still going down here. Next support level is going to be 1.3641 for gasoline there. Let's go take a look at meat, livestock type of products. Look at here, feeder cattle here. This is bullish trending here. It still hasn't gotten to our major support level at all. It kind of held a minor support pullback level at 203, and it's approaching resistance at 2222 here. If it breaks this resistance here, we're going to have a high probability getting into 229 and breaking that. If it holds that resistance level, this thing's going to come down here to 203 level and possibly come to all the way to, 213 level and possibly break that to come down to 200 and possibly 191. 191 is where we're predicting the major pullback level to be. So if it holds that resistance at 222, then it does have a high probability of coming down there. Livestock here, if you can see here, is bullish here. Still has not gone for a major pullback at all. Approaching a minor resistance level 166, but still it's got a lot of bullish momentum in it. Lean hogs, you can see here, didn't hold a major pullback level 86 here, so this looks like it's starting a bearish trend here. High probability of getting to 76.06, and at that point we'll have to see exactly what's going to happen there. Here we're going to now go for metals. Platinum here is sitting there holding here at this level here, 1192. However, it's still got 5 weeks where it could sit there and break this because momentum's still strong. So there still is a high probability where platinum will come all the way down to about 1097. So we have to wait and see what happens here. But as long as this resistance level up here, where'd it go? We got to mark it off. It's got to hold this resistance level here at 1259. As long as it holds that resistance level, this is still going to be bearish. Copper here is slowly depleting downwards. broke a support finally at 2.9444. Not a lot of people are talking about it, but it's got a high probability here again at 2.6508 and possibly even breaking that to keep on going lower. So this is definitely one to start a major trend going forward. Silver here got to support here at 13.86, kind of bounced off there. It's holding a minor resistance level right now at 16.8444. As long as that resistance here gets held, this is still going to be bearish, where it could still come down here to about 14 level and possibly keep on breaking it to keep on going lower. Gold here, uh, everyone says it broke the support. Yes, it broke it, but then it kind of came back above it. So major resistance is going to be 12,037 is a major resistance. As long as it holds that, this thing still is bearish, where it could get to 1132 and possibly break it to keep on going down lower. Next are bond and notes. Here's a 30-year Treasury. If you look at 30-year Treasury, this is very, very strong bullish. Held a support here that we had blogged about 138. Got to our support here once and then came back here, held back to a minor support level 142, held it, and now coming back to retest the high at 146. This is very, very strong, and you're going to notice this of all the bonds / notes is the strongest. So this does have a high it's getting to 146, and possibly we can sit there and keep on going higher. Next one here is a 10-year, and the 10-year here, it's holding the support here at 146. Resistance is going to be 127. You could see here this has a minor resistance, whereas the 30-year didn't. So this is a little weaker than the 30-year. And if you notice, the 5-year is going to be even look worse than the other one. The 5-year and the 2-year, you're going to see are consolidating here, and you could see between 118, 10 and 119, 21. And you can see the 2 years doing the same thing. These are ugly. So if you're going to go bullish, it's going to be on any of the Treasury / bonds. I would definitely go on the 30-year because that's got a very high potential of breaking the high and keep on going higher. The others are very weak to a point it doesn't look like there's great many opportunities in them. And then lastly, US dollar here. You could see here it had broken a support resistance level we had outlined, where we thought maybe it could sit there and bounce off there into the beginning of this year. But it didn't do that at all. It kind of broke it with vengeance to a point. Now the resistance is going to be 92.07 and then go 93.60 going forward. And if you look at the monthly time frame, this kind of shows you it very, very clearly. And you can see this is one big ugly consolidation pattern we've been in for years. And you could see we're getting close to the highs up here of this ugly consolidation pattern here. And the bottom was roughly around 80 and the top's up here. So we're going up there, and if you notice, we really haven't gone for a monthly pullback at all. So it's due any time now, but I don't know how much when it's going to happen and how big of a pullback it's going to happen. But, you know, a lot of people have been waiting and waiting and waiting. We thought it was going to be here, but it didn't quite happen. The thing is still going with vengeance. You can see as long as it holds the Tinkinson here on the Ichimoku level, this thing's extremely strong and keep on going. And if you look at the spot currency video, you can see all the dollar pairs are still very strong and not showing any signs of weakness at all. That's it for this 2 weeks. I'll see you guys in the next 2 weeks.